right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So today, today's going to be one of those days where we're going to have to try to make some lemonade out of lemons. I don't know if we're going to be able to, it's going to be a little. What I'm trying to say is today's going to be a little tough. I don't think we're going to see any massive movement. So you got to be real careful on what you're doing. Try not to chase the market anywhere. And try not to, there's just not going to be huge movements, in my opinion. So therefore, you've got to, take what you can get, and try not to squeeze too much out of the market, because I just don't know if there's going to be a whole lot available for when you squeeze. So let's go into the euro dollar, and here's the euro 15-minute chart. Euro continues to trade around the lows. So in the daily, I'm probably going to delete a lot of this stuff this morning, because we don't need it now. First of all, the rejection of the 618 retracement from last week, or 2 weeks ago, was significant. Okay, we don't need that information anymore. Right? That was the 618 retracement. Also, the 161% extension, this is the last 2 weeks, there was a confluence of resistance right here, and that stopped us on a dime. That 113 60 level. We can look back right now and go, God, if we could have just sold in mass at 113.50, how great is that? All right, so that was, we matched that up perfectly. And then we reverse. Now the question is, how low are we going to go now, right? Again, I'm just removing, some of these lines, because we just don't need them at this stage in the game. All right. So you can see big rejection on this underside of this trend line. That was a big confluence of fib levels that we've been playing short against. And it's worked out great. Now the question is, how deep of a retracement do we get from here? And where are we going to stop? Where are we going to find some support? Are we going to drop all the way down to 110? I think this is realistic, by the way. I don't think that's an unrealistic expectation. But let's go from let's go out to a 4-hour, or into a 4-hour chart, and let's see if we can find some decent prices. So we have the low here, okay, to the high. This is the 618 that Paul was talking about. Okay, if you go from the very low to the high, all right, we have a 50% retracement coming into play as well. Now, if you ask me, I think the more realistic expectation on this move that you're looking at here, I think the more realistic expectation is down towards 111. All right, this would be the 618 of the entire move, and the 786 of this most recent move. So I think this is a viable target, over the next 24 hours. And the reason why I say that is, well, here, let me grab that line. I'm going to just put it up just a little higher, just so I can grab it and we can see it. Okay. The reason why I think that support is going to come into play is because people want to own dollars right now. Okay. They want to own dollars. They don't own enough dollars. There's too many traders that have been on the short side of the dollar the last couple of weeks, and they're, like I said, they're getting wrong-footed. So, to see us sell off through this support makes sense to me, right? And to see this, like if you imagine this 4-hour chart, okay, we get kind of oversold when we get down here. Break through the support, trip all those stops, hit this fib confluence, and then bounce. Right? So I think the logical stopping point in the next 24 hours is going to be down here. We can call it 111.10. Now, Does that mean that we're going to make it down there today? Uh, oh, you know, it's possible. Okay, I mean, it is possible that we make it down there. Um, for right now, support's going to have to be at 111.65, but we're there. So I'm actually going to write down. I guess what I'll do is I'll write it down. 111.10, and I think that's going to be pretty key support, right? Now the question is, where can we, if we do bounce here, where can we look to sell the euro? And that to me is easy, but it's easy to identify. I don't think it's going to be as easy to get up here. Okay, so this would be 112.50. Okay. Uh, I have a feeling that anywhere near here we're going to find sellers. So if we can get up here, you want to look to be on the short side over here. All right. So I think that's how you have to play the euro. Now, over here, that's questionable. I'm going to write down 112.40. I don't even think we're going to make it up to 112.50. Okay. And we have to just put it back in a bearish trend because as long as we're below this yellow trend line, I mean, we were kind of range bound when we got up here because we're like, well, is there was a risk that we'd break higher, but I think that risk has receded a little bit. Excuse me. That risk has receded a little bit, so I think now that we're pushing back down here, you got to put it back in the bearish bias. I'd obviously be excited about selling the euro dollar up here. I just don't know if we're going to get that opportunity, frankly. Honestly, it's getting an opportunity to sell it up here is going to be great. I just don't know if it's coming. Like I said, there's going to be a lot of dollar buyers on dips now. Excuse me one second. Okay. All right. But yeah, that's what I'm seeing right now. No, hold on one second here. Yeah. Okay. Let's go over to the cable. So the pound's trading pretty heavy. Oh man, that was so great. Some guy on Twitter last week, we were here, and I tweeted out a chart. I said, hey, we're facing some really key resistance. We were at the 786. We were at 132.60, and somebody's like, it's going higher. That was like the only, somebody like, I love it when people tweet to me like, like with such, such a confidence, like right when we got here, and he goes, "Oh, it's going higher," and I'm like, "All right, well, if you say so." And that we that was like the high. I think I had no idea who that person was. Don't really care either. Now we're breaking back down into this. We're breaking back down into this triangle, which is significant. All right. Let's remove that. Let's remove. Trying to get rid of that line. Okay, let's remove that. Keep that. We can remove that. I can remove all this stuff from the inverted head and shoulder pattern. Okay. And that 786, we already know that that's stuck. All right, so we can remove that. Actually, I think we'll get rid of this and this, and we're going to go right to, I'm going to keep it right around like that. This, because this isn't, actually, you know what? I'm going to grab, okay. You see this? That is what I'm going to call, and I'm going to reference as the sell zone right now. Okay. That's the sell zone. So it's kind of like if the euro gets back to 112.40, let the cable, get back up here. The pound gets back to 131.70. Actually, probably even, 131.60. I think that's going to be a place to be on the short side. Okay. Let's take the low here, the high. We're probing the 50% retracement. The 618 also has a horizontal support right through here. So we're going to call 130.20. Okay. 130.20 should offer us some really good support today. 130.20. And then resistance is 131.60. Should we get up there? And we are bearish. As long as we stay below the 135 level, all in all, it's bearish. This is just a bearish consolidation. Here's your weekly. That's 135. It's a bearish consolidation below that 135 level. Okay? So yeah, I think at this stage in the game, if we can get a move down here, probably get a bounce. Which, I would be interested if the pound dropped like another 50 pips. Okay, 50 or 60 pips down here. I'd be interested in buying some cable crosses, like shorting the euro pound, maybe buying some pound New Zealand, something like that. I'd be interested. I'd be interested down there if the cable gets down there. But the cable's trading obviously very weak right now. And the question will be how big of a rally can we get back? I think this is you're I don't want to say dreaming, but it's going to be a pretty tall order to get it all the way back there, at least based on what we're looking at right now. Okay. Now we do have PCE coming out later today. Maybe personal income and spending and PCE come in, just horrendous and push us back the other way. Maybe. I don't really see it, but it's possible. All right, let's go over to the Swissy. Now, as I mentioned to you guys this morning, I got wiggled out of the Swissy like truly like a rookie. That was a total rookie mistake. And if I my wife's like, "Is everything okay?" I'm like, "This contractor has cost us a lot of money." And this is on Friday I had the contractor over, and cost me the price of a small car, basically. This wiggle out. It's all right. I made it back elsewhere, but still, I was like, damn it, what a dummy. Because I knew that inverted head and shoulder pattern would play. It did. Okay, played out just fine. And now, Let's get rid of this. Now that inverted head and shoulder pattern played out, let's figure out why we stopped where we did. So you take the high here to the low, and whammo, right at the 618. So I'm going to say that 98 cents is big resistance, because if we can break above 98 cents, see the relative strength is already, this is an hourly, but relative strength is already diverging a little bit. We're pretty overbought. But if we clear 98 cents, I'm going to make the assumption there's already people shorting the dollar Swiss right now and putting their stops above 98 cents. I got to imagine that there's a lot of stops that reside above there. It's a 618 retracement, guys, right here. We break above that, we might spike. We might spike all the way up towards 98.50. All right, where's support going to be? It's a good question. I'm not going to write down the hourly. I have to make the assumption that we continue to consolidate. So. Let's assume we break below that yellow line. Let's make the assumption. Where are we going to go if we do? So I don't know where support is. I am going to write down this. I'm going to write down 97.65. But I think if we break 97.65, we're probably going back down to like 97 cents. Oops, 97. Sorry, 765. Okay, we are in a range. Big range too. Very much range bound. All right, let's go over to the dollar yen. All right, so here's the dollar yen. Dollar yen, I mean, pretty substantial move in the dollar yen, obviously from Friday. And I have to make the assumption that over the course of the next couple of days, we're heading back to this channel top. Okay, let's get rid of this. Oops, not that. Let me get rid of all these arrows. %, retracement comes in at 103.50. The 38% retracement is right here. And see all this resistance right through here? I mean, ton of resistance through here. All right, I'm going to write down 102.60. Okay, that's just above the 38% retracement. There's a lot of horizontal resistance here, so if we can clear 102.60, then that'll free up. Whoops, 102. That'll free up a move to challenge the channel highs. We have to get above this 38% retracement though. Support. I mean, that's pretty far away. I mean, that's so far away from where we're currently at. That gap didn't quite get filled, but you could argue that that candle closed it. You know, there's an outstanding argument in the markets that this would be a gap fill because the top of that candle and the bottom of that candle overlapped. So rather than the actual all the way down to the closing price. I'm going to write down 101.80, and that's just because that is the basically the opening price, the closing price for the week on Friday. So I'm going to write down 101.80. It's not great support at all by any stretch of the means. Okay. We are still in a bearish trend, and I know it feels a little funny to write that we're in a bearish trend in the dollar yen, but this is still a bearish trend. We're just retracing in that bearish trend right now. Okay. All right. When I come back, we will continue on with our analysis. So don't go anywhere. Thanks everybody for being here. See you back in a few minutes. About the wait, this is Blake Morrow. You are listening to the Morning Edge webinar. We're going to have to actually move kind of quickly here. So let's go over to the U.S. dollar Canadian, and crude oil is getting a little bit of a jolt lower today. I mean, we're down like 1.2%. So it's keeping the Canadian currency weak. So now, one of the things about the dollar Canadian, and I actually have short New Zealand Canadian exposure. I'm up just a little bit, but I'm actually considering closing it out. The reason why is that I look at the Canadian currency, and I think a lot of people are getting stuck on the short side of the dollar Canadian. In other words, they were long the Canadian currency, and now it's coming back up in their face. I don't think a lot of people saw this this bigger trend line down here. That we identified that last week. So the dollar Canadian. Let's see how much further we can go up here. I'm going to take the high to the low. So we're probing this 38% or the 50% retracement. A 618 comes in here at 130.66. 130.65. So that's going to be some near-term resistance. Support's going to be the breakout point, which is 129.70 from last week, if you don't recall. 129.70, and let's say 130.65, 130.65, and we're going to go from being bearish back into a range because, like I said, I think a lot of people got caught on the short side of this one. All right. Let's go over to the Kiwi. Now I sold some Kiwi this morning, and this looks like we might be flagging here. This is a pretty bearish looking move. I mean, if you think about this, it's just that could be a pennant. Um, let's say this is, oops, shoot, I didn't want to do that. I think we're going to be really lucky if it makes it back up here. 72, we're going to call it 72.65. Any move up to 72.65, you got to be a seller. Okay. We're in a range, but just remember we did a top end failure this week. That was the kicker. We did a top end failure here at the channel highs, right? It's a false breakout and reversal. So because it was a false breakout and reversal, that's what puts the risk at a downside move. Obviously, if we take out 72.10, you're going to see that really start to extend. 72.10. That is key. Let's go over to Aussie. Very similar look in the Aussie. You know, we had so many. I mean, we had bearish, weekly candles last week. This is a tweezer top weeklies. Took us lower, obviously, last week. To me, this just looks like a bear flag. Now, remember, we have a lot of Aussie data coming out this week, so if we can get a rally back to 75.70 or 75, yeah. Obviously, support is going to be at 75.25. We are in a range. We're just trying to make our way down towards the lower end of our range down here. All right. Dollar index. So the dollar index, huge move out of the, from the channel bottom here. So now any dip down to 95 is going to be bought, any which way you slice it. What we've got to figure out now, let's get rid of these fibs since we, knew all the confluences that we got down there. Oh wait, this one, I can get rid of that. Oops, that's not what I wanted to get rid of. Okay, let's take a look from the high to the low. Surpassed the 38% retracement, 50% retracement, and a lot of previous support over here too. That comes in at 95.85. I'm not even going to write down 95 cents today because, expecting the dollar to come all the way back down here, I just don't know if that's realistic. I'm going to write down 95.50, but
We're just in the middle of a range, upward sloping channel, just still in the middle of a range. Um, okay, peso. This freaking thing is strong. And look at the peso. This thing wants to pop into highs. Let's move that really quick. I think I removed everything off the peso last week, so that's significant. 1865. If we break above that, that'd be very, very bullish. Hmm. Let's imagine that this dip allows it for a little bit of a pullback here, especially if equities can rally back. Um, I'm going to write down 1846. It just because it's right here. Okay. I don't know how good of a support that will be. Like, let's just imagine this, that's a 38% retracement too. So we'll go with 1846 for now. It's not great, but that is a 38% retracement. Okay. Norwegian krona. I mean, this is uh, this breakout point here at 825. That is where you want to look for dips, in my opinion. Because if you look at the daily and the weekly, a lot of false breakdowns, big hammer here. So now any dip to 825 will be bought. Resistance. Well, we're at the 38% retracement right now. I'm looking over here. Um, the next resistance is going to be at 836, which is that 50% retracement, which we have a lot of support through here. So I'm going to write down 836. It's not great, but it's there. Okay. Let's go over to the USR Swedish krona. Dips to 843 are going to be bought. Yeah, it definitely dips down to 843. Resistance maybe 856, which would be the 618. It's just, it's hard to gauge these moves at the moment. Okay. Range. Okay. All right, guys. So you're ready before our PCE data comes out. So PCE and personal income, personal spending coming out in just a few minutes when I come back. All right. Thanks, everyone.